break over here in order to do a contrarian trade or counter trend trade just to complete a swing high. Okay, so essentially getting a move where the 4 hour peak high has actually touched a PD array, right? That is something that I would use for capturing the weekly expansion. But I don't use the weekly expansion, a lot. Only sometimes when I feel like it. But yeah, if I were to do it, I'll do it based on that H4 and daily as well. Okay. Damn, I was looking for a buy. I probably missed it. Yeah, so I'll post a recording after we're done. Yeah, breaker blocks, order blocks, etc. That quick. Yes, you need to study that. So that's the work that you have to put in from your side. But with time, you get it. Right. So with time, you shall get it. Okay. So is everyone else okay? Oh wait, can you explain your weekly targets? Rejection block always have to have long way. No, even the next week can have a longer candle. That doesn't matter. As long as it, shows a clear rejection from that PD array, like a big, big rejection. Can you explain your weekly targets? In the sense, what do you mean by weekly targets? You mean the highs and lows that I would target for a week? That would be based on whether I am bullish or bearish. If I'm bullish, I'll target the H4 high. If I'm bearish, I'll target the H4 low. So meaning the most immediate obvious target. Okay, the most immediate obvious target. Am I right in thinking London makes the high low of the day? Sometimes, not all the time, but most of the time it does. Sometimes it doesn't, right? And that's because of the current order flow that it's following. Like if you're already in a buy program, right? Uh, it will most likely not go all the way down here and then do that again, right? So it's only depending on the circumstances, right? But once everyone does their little challenge thing, right? And once they are done with it, then you will see exactly when it will make that spike up or down, forming the high of the day or low of the day, and when it won't, right? So that's dependent again on everyone staying above 10 hour at the end of the week for 2 weeks. Okay. So for now, just trade what you see. Use everything you know. Trade what you see. Don't think. Okay. Now, so now here's the thing. Most people, what they do is they uh, try to do this. They think that okay, I see prices doing something. Okay, let's say we assume that a swing high is going to be formed, right? And then they're like, okay, I assume that it's going to go up here and then it's going to go down. But it won't happen like that. It needs to break market structure first, then go up and come down, right? So when you assume as it's happening, like let's say price is over here, as it's happening, you keep your buy limit over here, stop loss here, take profit here. Price comes down, takes you, and then just goes through you, and it goes up, right? Don't trade what you expect to happen, right? Trade what you can see right now, which is why we wait for the balanced price range, which is why we wait for breakers and all of that, right? People who keep their buy limits exactly on the spot, okay, and sure, anyone can do that if you can exactly pinpoint that exact spot. Okay, But at the same time, whether it's a clean bearish or bullish order block, whether it's a clean rejection block, right? We don't know because we don't have investment bank level, central bank level data feeds where we have the depth of market, right? In the sense that we don't know at what price how much money is offered. Like, if for example, right now 30 at 36,000, for the price of 36,000, how many people in terms of a dollar value, right, in terms of what is coming in the market, how many of them are actually willing to buy at that spot? If there are so many people that's willing to buy at this spot, price will now immediately expand. Okay, so the reason that we don't buy over here, right? I mean, I could be wrong on this trade. I'm just practicing now. So the reason that one could be wrong over here, right, is because there is nothing over here supporting this. From what we can see that this point over here is what caused the shift in momentum, right? Or over here we saw price coming down, and then over here we saw a quick shift in momentum, immediate move up, liquidity void, right? So this is a shift in momentum. So shift in momentum also indicates a shift in order flow. Okay, it also indicates a shift in order flow. So some people can keep their limit orders and say, oh yeah, zero drawdown, blah 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 blah. Okay, but in reality, some cases, yes, through experience you can. Some cases it's luck. Okay, some cases it's luck. Why did it go for rejection block while it was clean order block? I I would say that it's because it's a high time frame thing here. This one, right? This from this part, right? This part, right? Oh, okay. So again, when you go like only okay again, right? Let's clarify this, right, for everyone. And am I still on record? Yeah, I am. Okay. Been caught out a few times this week with BPR. Can you show some of the return to origin and others that returned last year side? I'll do that tomorrow in detail, right? Because if you've been missing out, then there's some things that have been missing, right, in the understanding of things. So I will go through this in detail tomorrow, right? For now, just go through yesterday's stuff, today's stuff, right? Have everything in order, right? Because obviously, as we go through the week, when price action does stuff that we did not expect, we tend to doubt what we already know. Oh no, it was supposed to do this. Oh no, it was supposed to do that, right? And then we get caught off guard. When we get caught off guard, we start questioning, oh shit, am I doing this right? Right? No, you are doing it right. Just take a step back. Take a step back, look at your charts again, uh, see, look at it through hindsight and see, okay, if I knew exactly what I was doing, if I was acting like knowing the correct order flow, knowing the correct bias in the marketplace, this is how I would have done it. And so when you do that, then you will never make that same mistake again. Okay, I won't say never. You will make it again, but at least the next time you won't make that mistake again. Okay, so that's why, right? So uh, whenever you start looking at 1 minute, you start questioning yourself. Why this? Why that? Right? So you always start off from 15-minute or above, right? 15-minute or above. And I would say if you are like me, who only look for 10 to 15, 10, 20 pips a day, 15 minute to 1 minute is enough. Okay, because on the from a bigger picture, right? From a bigger picture of things, 15, 10 to 20 pips, right? Is basically from this big range, it's only this small part, right? So what does that say? These small parts. What does that say? It's just volatility, right? It's just volatility. As much as I hate to say it, I am a scalper. Okay, in a way. But when you reach this point, you are a day trader. Okay, but ICT classifies scalping and day trading under the same category, right? So, but because I stick to this and rarely go to this, I call myself a scalper. And so we are basically trading the intraday volatility. Most of us, most of us, right? We are trading intraday volatility, and this is sound for intraday volatility only. Because from the, again, like I said, from the bigger picture of things, why am I deleting this? Okay, from the bigger picture of things, these moves are only basically these small blocks of price action. Because sometimes you may not notice it, or maybe you do. Once your trade hits take profit, right? What happens now? Let's say you buy. Okay, for example, uh, let's say you buy here, take profit here, 10 pips, right? Okay, hits your take profit, comes down a bit, and then boom, goes higher, right? Why? Because we are only taking part in the small piece of the volatility. Okay, we are taking part in a small piece of the volatility, and that is enough. That is enough. Main reason I'm saying that's enough is because these are the most easiest targets. Easiest targets. Most of us, depending on your the level of your patience, we are patient enough for 10 pips, not 10 pips, let's say 10, between having the patience for 30 minutes to 1 hour, looking at the charts, looking at your trade. After that, after this 1 hour passes, you're thinking to yourself, oh my god, no, this trade is taking too long. Do I add another position? Do I close this? Do I take partial? Do I do this? Do I do that? Only if your targets are, quite far away. But if it's close by, like mine, between 10 and 20 pips, it happens in like 30 minutes, sometimes even 5 minutes, right? So that, for me, that's enough, because 10 pips, right? If you put it into perspective, right? If you have one lot size of one is $10 per pip, right? $10 per pip. So 10 into 10. Oh, someone clarified for me. One lot is I forgot because I use my magic keys. One lot is $10 per pip, right? Yeah, okay. See, my magic keys is ruining me. Okay, so one lot is $10 per pip. So 10 into 10, 10 into 10, we have 100. Okay, so that's $100. And of course, the with our account sizes, most likely not one lot, right? So um, most of us will have like 5 lots. Okay, 5 lots. So then we have 50 into 10. That's 500. So that's 500 in a day. Okay, so let's erase this, because like that's like lowest possible scenario, right? So you have 5 lots into 10, 500. Then let's assume that, okay, a red news on the way, so it has a potential for it to go to 45, 90, 100 pips. So that's your weekly range expansion opportunity. As for example, Euro USD, this week's big sell off, it's sold off for like about 100 pips. So you have 5 lots, 50 per pip into 100, right? 5 lots, 50 per pip into 100. You have $5,000. Just like that. Just in a day. In a day. Just one big sell off, you have $5,000. Simple as that. Okay. Uh, because you do that, because using everything that we know, you know that, okay, red news on the way, definitely that's going to be a big expansion. Which direction? Okay, it's this direction. It's going to go all the way down there. Fine. And as it goes down, I'm going to add on to my position as long as it's premium, is as long as it's in premium. So you add another 5 lots. So then, so maybe, it already went down by 30 pips, so you have another 70 pips left, right? So we have 5,000 here, and you have 3,500 here. Then altogether you have 8,500. Okay, now you better go up, please. Okay, so you have 8,500 in a day, right? Simple as that. So That's why I stick to trades like that, the 10 pips to 20 pips. And of course, if there's any big expansion, I'll take trades like this. So whenever I take trades like this, it's because uh, I believe that it's gonna, either fill in a void, it's gonna fill in a gap or whatnot, right? So yeah, I think Bitcoin was a wrong move. Yeah, it is what it is. Okay. All right. So that's basically why I go for the small targets. Okay, that's basically why I go for the small targets. So is everyone okay? I wonder why it dropped though. Let's see. Not yet close to this point. Was it this? If it was this, I think it had every reason to drop. Yeah. Okay. Yeah. Yeah. My bad. Yeah. What was that? Yeah. It was because of this daily. This one. This wick over here. I remember, I refined it, but looks like due to this wick, it wasn't. A refinement wasn't required. So. Yeah. Okay, everyone. So that's all I have for you guys today. Simple, right? Market structure. So we have market price going in one direction, then we have price going in the other direction, and we understand how and when it makes a deeper retracement, when it does not, when it is not required for it to make a deeper retracement, and if it does make a deeper retracement, it's going to follow premium and discount ideas. Okay, so I'm going to stop recording now.